Hello and welcome at Stocks Advisor channel. As always at our channel we are looking for interesting buy opportunities for US based stocks. Today we will talk about NIO Incorporated, trade ticker name NIO. Well, today the NIO made minus 5.32%, finishing at $39. After hours trading slightly in plus, but still not that much, just within the volatility ranges 39.29. And just to give you overall let's say understanding what's happening with this position and why is it in this shape, let's have a look at this bigger scale, and then it's clearly becoming obvious that we are just experiencing a correction wave before further growth. So if you look here, we had really a strong growth, at least from let's say July till beginning of February. And then in mid of February, we had this classical break of the upwards trend, and major correction started. And correction started with seven channels. So the first channel for correction, of course, was observed during the period of February all the way to mid of March, where we rebounced from moving average 200, this red line, and then we had actually bouncing kind of decline where moving average 20 worked as a very strong resist line. So you can see all the time the price was rebounding from it, and we were observing another actually support level here, which you can see on below. Let's call it actually S1. So why is it interesting? Why is it important? Because now what we see, we finally did, and now let's look at the big, actually at the bigger magnification. So we finally actually pierced moving average 20, you can see, but usually what happens on these kind of corrective moves, both moving average 20 and 50, the blue line works as a resist levels, and indeed that's what happened. So starting from S1, we rebounced by mid of April, and now already 3 days we tried to pierce it. 3 days ago, didn't happen. Now we are completely in decline, and now moving average 20 work as a support line. So this pattern is so-called entrapping on correction, when the price, the candle sticks exactly between moving average 20 and 50. And usually two types of situation might happen. It's not yet about, let's say, final recovery, but what might happen here, we could have red-white combination, meaning that tomorrow we might have a white candle, which will again be entrapped, but will go from moving average 20 all the way up to moving average 50 and then go higher. If this is going to happen, well, we might speak about, let's say, some recovery signs, but if not, we can go lower, and then we even might pierce actually the S1 line and go a little bit lower. So if we need to be prepared, because from other indicators it's not yet clear how it will go. If you look at RSI, you can see that it is actually in the middle, so it's not really let's say decisive. You can see here we are just sitting in the middle, 47.26, so not that decisive. It could go either way. The same is true for MACD here. Below you can see that MACD histogram is finishing the upwards wave, but it might result in both a secondary upwards wave, the bigger one, and then it would mean that we are indeed going to pierce moving average 50, making red-white combination. But also what might happen, it could go lower and start forming a negative wave, similar to what we saw in April, for example, and then it would mean that we are actually declining. So to trade safely here, we need to appreciate both possibilities, both opportunities, because miss the chance to make profit here. And as you can see, as you know, NIO is the position that can go really high upwards as well as downwards. So if you trade safely, you know what you are doing and you know the levels, you can make actually here quite reasonable profit. And speaking of profit, here we speak about profit making from 15 to 20%. Usually it's 10 to 15 we advise, but in this case we can actually go a little bit higher. So let's therefore place here, and then we can speak about how to buy. So first of all, of course, we want to take into account the possibility of red-white, so of immediate rebounds. Therefore, we can take a small position here at the opening immediately, not higher and all the way, if it goes a little bit lower, till moving average 200. So this would be the first entry position between 620 at the bottom, and at the top it will be 38.83. So let's write it as a call out for ourselves. So this will be 36.20 and 38.83. Okay, 36.20 and 38.83. Let's save it. Let's place it here. So this is the first entry based on expectation of red, white, and rebounds. It could be also bullish engulfing, starting a little bit lower than this red candle of today. If this is the case, by the way, you see already after hours we're trading already plus 2%. So it indeed might be the case. So if this is going to happen, immediately activating the channel 36.20, actually 33.83, and all the way to 36.20 would be immediate buy with the first portion. Then what we need to take into account, imagine if we are not going to rebound, so if it will be a fake rebound, so the failure, so it might go a little bit higher and then rebounds all the way downwards. Of course, then we need to be prepared to buy lower, and most probably the price will pierce moving average 200. It also go all the way to S1 and even a bit lower. So therefore, we need to take into account this support line, which is quite strong here. It's 29.76, and as a top, we will just take the moving the S1 as a support line. So by that time, it will be actually somewhere here. So it will be 33.23. So let's write it again for us. So this one 29. Okay, so let's write it here again. So this will be therefore 29.76 and 33.23. So this is the second channel to buy if the first one is not working. So if we are not going to have a major rebounds from the current level, then actually we can let's say expect for rebouncing at the second channel, which will be very strong technical rebounds, and usually being lower than moving average 200 on this major corrections patterns that we observe, and approaching the next nearest support line, which is actually this level between 76 and 33.23. Usually this works as a major rebounds moment, and only what can cancel this as a negative catalyst. As always, if you are not first time at our channel, you know we do this. We always keep funds to average down in case of negative catalyst coming in, which might be in the form of the news or some global market situation. Nevertheless, whatever it is, we need to keep some funds to average down, because there are many examples even at our channel when this is happening. So if you would follow this, you would really make a profit. If not, you just have to take loss. So with this being said, the very principal level to average down and mitigate all risks coming due to negative catalyst would be here, a bit lower in this case. Let's put it safer. It will be between actually 22.78 at top and 20.56 at the bottom. So this will make for us the third level to buy. And this is not that we, again, it's not that we predict the price to go there. It's not that we say, well, we wait till there. No, this is the level where we would like mitigate risks if any negative catalyst kicks in. And this level is really based on serious considerations on those support resist levels and support resist channels. So with this being said, actually, these are the three levels to buy. And as you know, we are talking about non-linear averaging down, because this is part of our mixed analysis at our channel, meaning that we do 3 in 1. So first is a recognition of the pattern and technical analysis. Second one is non-linear averaging down based on support resist levels. And the third one is risk mitigation due to negative catalyst, if any. Therefore, with these 3 levels mentioned, the way to play here is classical 5 portions. Sometimes we give different, but usually it's 5 portions. For those who are not first at our channel, you know what it means. If you are first, so we explain. It means that the funds you would like to play here, you can split in 5 portions, and then you can buy with 1 portion through the first channel. So immediately if it's activated tomorrow, then you can buy with another 2 portions in the second channel if it is activated, and then With remaining 2 portions, you actually keep them for risk mitigation level. So for the third one, if there's any negative catalyst, you buy there through, and then you are very safe with the best optimization to profit versus loss. You can actually exit with a profit even if the worst day doomsday scenario comes in. So this is very might take a bit longer time than usual than those which are considering stop losses. But here it's indeed optimization for profit versus time, meaning that we are okay to spend extra days, but we still want to exit with a profit. When if you are talking about stop loss strategies, you actually say, okay, I trade too fast. I know I trade actually almost on 15 minutes candles every day, so I want to save my time and I pay with my money, meaning I take losses. So these are 2 different strategies. We follow this one, more safe one, a bit longer, still daily trading, but a bit longer, and though allowing you to make the profit. And in this way of trading, actually, although it sounds a bit contradiction, but it is indeed the case, the worse situation goes, the better for you, because you can buy through those non-linear averaging DAOs, and actually you will exit with even more profit. So with this optimization, good luck for NIO. And see you at another episode of Stocks Advisor channel.